car buyers are facing extreme debt. Could you imagine car payments of $1,000 a month, $1,200 a month, even $1,600 a month? There's so many car buyers today that are so deep in debt, negative equity, so far into hawk, they're paying more than a lot of people pay for their houses. Yes, welcome back, my savory seeds of sunshine. Today we're going to talk about the literal crisis and the panic that we're about to embark in, as a lot of car buyers are getting way in over their head in recent car buying experiences. And I want to share a story of a TikTok user named Blazy Arnold who felt like it was appropriate to go buy two brand new vehicles. One for her counterpart. So Blazy bought an SUV for herself, a Chevy Tahoe SUV for about $84,000, and unfortunately had a 10% financing rate. She also went out and bought her husband a GMC Sierra 1500 AT4 pickup truck that MSRP on it was about $78,000, but got snookered into a 14% finance rate. The monthly payments on those vehicles are about $1,400 for the Tahoe, as well as $1,600 for the truck. Now, this was posted all over TikTok, and there was viewers were literally outraged. You had a barrage of viewers that said, hey, comments like, yeah, that's great to see some success. And yet other viewers were commenting that it was such an irresponsible use of funds, and I pay more for my house or my land or my property than you pay for your vehicles. So Easy Car Buying reached out to Arnold for a request for interview to understand a little bit more of the background and the understanding as to why people even get themselves in this position. But unfortunately, we saw a failure to respond. But at the end of the day, Arnold commented with about 2.5 million views on the video, why do I do this to myself? That's a question a lot of people wonder. Why do people get into this position? $1,600 a month, $1,400 a month. That's a collective total of $3,000 a month. Yay, look at me and my math skills. But the bottom line is, all joking aside, that's $3,000 a month. Even one car payment at $1,600 a month is almost literally enough to flatten the King and Queen of England. So part of the ultimate compounding problem with this is Arnold went out and bought these two trucks during some of the worst times in automotive history. Yes, 2021, 2022, everybody knows that's when the market was literally at its peak. People were getting underwater, they were paying market adjustment fees, the extras, the add-ons, paying more than the MSRPs have ever been, and high interest rates just made the matter just that much worse. But unfortunately, Arnold isn't alone. There's lots of people all over this globe that are snookered in the same position. Now, nobody's bending anybody's rubber arm, and that's why we all have to ask the question, how does somebody even get in this position? I mean, we know on Easy Car Buying, we say we always got to look for deals, incentives, low interest rates, maximum amount deposit down, specifically if you have high interest rates, or even better, keep running what you've got. If you've got an older truck or an older car that's running well, it's fairly reliable, what does it hurt to put a couple grand into it? It's going to save you a huge amount of money in the long run, and the more you can defer massive car payments, the better off you'll be. And without commenting, we don't know the background of this particular person, Arnold, for example, and what their finances are. Almost clear to me that that is almost a subprime lending rate, because in 2021, rates were increasing. In 2022, the average lending rates were between about 4.3 and 6.7%. Paying between 10 and 14% would suggest or imply maybe the financing rates were a bigger risk by the banks, maybe the borrowing was a bigger risk by the bank or the lenders, and unfortunately, Arnold had to pay a little bit more money to borrow the money for these new and expensive high profit margin pickup trucks. Sadly enough, though, Arnold is just a growing number of people across America, US, Canada, that are embarking on these extremely high interest loan payments. Obviously, people want that shiny new pickup truck, car, SUV, sports car, Corvettes. They've never sold any faster than they are today. There is a lot of popularity in buying the latest and greatest in the bling. Everybody wants a new cell phone, new car, big house. You know, you see it all over social media, and people get pulled into these and gravitate towards some of these expensive items, whether it's just for a little bit of clout, whether, you know, in some cases you see a lot of it on YouTube or internet where people do get engulfed in this environment where they feel like they have to drive these cars, have these expensive items. Whatever the reason, people do and tend to have these high and expensive tastes. At that time, the banks were a big part of enabling this. The banks were allowing people to buy products, cars, houses, even with subprime lending rates or credit scores that were a little bit less than perfect. And now here we are in a situation where a lot of people bought in 21, 22, where a lot of these vehicles were priced really high. And now we've started to see some of the natural depreciation kick in. And now we're seeing people in a negative equity position, a big negative equity position. And that just grossly compounds the problem that people are in. You're stuck in it. You're gone down the rabbit hole and there's really no way out other than riding this ship to the bottom. I like to call a situation the Titanic. But I like to do a little cost of living calculation. So the average American citizen earns, again, blended average, about $68,000 a year. That comes down to a monthly income of about $5,677. But after you include the taxation portion, we'll say about 70% roughly, 30% tax rate on that income, leaves a whopping $4,000 at the end of the month. Okay, now we think about this, a $1,600 a month car payment for the one vehicle, okay? So let's talk about that $1,600. Insurance rate being on average, we'll call it $400. We'll even round it down. We'll call it a cool $2,000 a month. Then we incorporate $100 a week for gas. That in a month, you're talking $400 or $500. Now you're at $2,500 a month to pay for that car payment, the gas, as well as the insurance. That's just to keep it legal and on the road. Now you have $2,500. All you have is $4,000, the average income in the US. That only leaves about $1,500 a month left for food, housing, property taxes, and all of the other extras. You can see how a lot of people are getting into huge trouble. I also have some filthy stats for you. Would you like to hear about that? There's a huge number of people that are taking on car loans that exceed $1,000 a month. That's a big dent in your wallet. Yeah, as a matter of fact, it's way up. 5% way back in 2020 were the number of or percentage of vehicle loans that were over $1,000 a month. However, today we're seeing about 17% of the car loans exceeding $1,000 a month. And further to that information found on Edmunds' site, we also can say that the average car transaction cost has gone drastically up from about $38,000 to about $47,000 today. And the average interest rate's also gone up from 5.7 to about 7.1%. So clearly people aren't necessarily getting the message, and while you need a vehicle to get around, to work and play, the bottom line is there's always better cost options, maybe live within your budget and your means. You don't some people don't necessarily need that Tahoe. Maybe driving a much smaller SUV or smaller car might fit the bill better. It's much nicer to live within your means. There's less stress. And honestly, this isn't about critique because we all like shiny new toys, but we just like to know that people don't have all this stress and anguish because that leaves a lot of anxiety just hovering over people's heads. Nobody wants that. That stress just ages you prematurely. Look, white hair to prove. But that's just a bad situation that a lot of buyers are getting themselves in these days. Did you also realize that over 70% of those large SUVs like the Tahoe those customers are paying over $1,000 a month? When you're talking about Sierras or those 1500 GMCs, about 40% of those trucks are over $1,000 a month, and largely because a lot of people tend to use those for work. You know, a lot of them are used for business, and of course a lot of people have the deposits, down payments to reduce that monthly payment. So unfortunately the burden is significant when you're buying those highly priced full-size pickup trucks and SUVs. And then to put this all in perspective, did you realize these are some of the most popular selling vehicles on the market? Yes, full-size pickup trucks. Ford F-150, the most popular truck sold in America. One of the biggest sellers of all of their brands within Ford, GMC, the Sierras and Chevys. Of course, as well, the Rams aren't selling all that well, but full-size pickup trucks and full-size SUVs are some of the most popular selling vehicles across North America. Large trucks are the third best-selling vehicle genre in the United States, and full-size SUVs like the Tahoe, for example, were a little further down at 24th spot back in 2023 with about 110,000 units sold. Suffice it to say, full-size trucks are popular, and when you're hearing people spending $1,000 a month and 40% of that population are buying these trucks, yeah, you know there's a lot of people paying that kind of money and those kind of monthly payments. People don't own these trucks, the banks own these trucks. Just for a quick point of reference, you wonder how much do these vehicles actually cost? Well, for 2024 Chevy Tahoe, you're going to expect anywhere from $55,000 to about $80,000 depending on the equip. And the 1500 Sierra is going to range about $44,000 up to about $83,000 depending on the state of trim levels and so on and so forth. So it's not an inexpensive proposition. And an expert from Experian says this is nothing unusual. A mass amount of households in the United States and Canada are also in the same space, where there's at least two making large payments on their vehicles. $1,000 a month car payment is on the rise in a huge way. And about 59% of US households have at least one vehicle with these huge payments. So as a result, the average car loan balance in 2023 was almost $24,000, which has risen up 5.2% from the year before. Like, I'm a numbers person, but at the end of the day, I mean, you could just look, listen, feel the stress, the anguish that people are under. And a lot of it is self-induced, and a lot of it is people getting it over their heads. And now people are faced even in further situations where they have a negative equity environment where they can't even get out without losing a ton of money. And for those reasons, and I would suggest if you are in one of those situations and you're now facing, well, it's time to trade in because we have one of these vehicles I bought in 2021. I've got some heavy negative equity and it's time to trade up. You know what? This is where people get snookered, but they constantly feed this rotating beast and they'll never be out of debt. But if you feel that you have to get out of that vehicle for some reason, if you need to trade up, not the greatest idea, but if you really need to, I would strongly suggest at least have enough money to cover your negative equity component and then go in at least zero balance and then buy the next vehicle under its own merits and not necessarily have to roll over any of your negative equity, because that's the worst thing you can do. That's where you're really going to feel the burn in the long haul. And so Arnold borrowed about $162,000 in vehicles, and she even commented on TikTok that while they weren't necessarily the best deals, they're also not the worst. That's kind of the going rate. Now, with that said, Arnold even openly admitted that it was about time. She was getting tired of paying that huge amount of money every month. She was looking at pitching that Chevy Tahoe. Even after that $10,000 down and $50,000 in payments, it was time to send it packing, and she was even looking at downscaling to something a little simpler like an older used Audi. And so my only advice is, obviously used car prices are down and obviously far more affordable. And now, even with the fact that you may be stuck paying a slightly larger interest rate, if you buy yourself a car, maybe a 5 or 6 or 7-year-old used car, used SUV, used pickup truck, you're definitely subject to much better flexibility in the price that you pay, the type of vehicle, and as well your monthly payments. You can literally slash them down quite a bit lower. So it seems to be a much more palatable situation for many buyers who are literally hovering on that line of not being able to make the payment. And Arnold did openly admit that she was going to utilize earnings from TikTok to put that directly to the credit card to pay for that $10,000 and make that vehicle disappear. So clearly starting to think outside the box and using less money from the bank and a little bit more money that she might have on her own. And I think that's always generally a good case. I've always been of the believer, cash is king. And truly, when you're dealing with interest rates that are more than 1.9, 2.9%, anything above that, you generally want to pay more cash and get that interest rate out of there. I mean, if you're getting a 0% interest rate, I mean, ride it out, do what you got to do. But at the end of the day, you shouldn't be making payments for more than 3 or 4 years anyhow. So if you're beyond that, then you've probably outspent your income. Now, of course, on that note, you know, used car prices have started to slide a little bit. Even these vehicles like the Tahoes or the 1500s are starting to slide a little bit. And that's only because we're starting to see MSRPs level. We're also starting to see no more market adjustment fees. And certainly, some of the incentives that some of these OEMs are starting to throw our way are going to help the cause. It's going to help people like Arnold to pick up that new vehicle for, you know, possibly 5-10% less than it was originally. And hopefully with enough time, and maybe we're going to see the banks and the reserves start to drop the interest rates here coming up, hopefully this year. You might also get a better interest rate as well, compounded with the fact that the lower sticker price might get you a little better deal. But at the end of the day, you still should live within your means. And just in case you're not totally sure, there are great rules of thumb that can give you some guidance, and I like to share that with you because these are things that I live by, and when I find I follow these rules, they generally keep me on the straight and narrow, and I'm able to have a few extra dollars at the end of each month to spend on some food, maybe go see a movie or a hockey game, and I'm able to do so without being overly stressed out. So think about the rule of thumb. No more than 10% of your after-tax earnings should be spent on that vehicle payment. So if you're thinking about like that calculation I did earlier, where the take home after the average US citizen takes home X amount of dollars, their take home is $4,000 a month after tax earnings, you shouldn't really be spending more than $400 a month. So referencing what the average US consumer is looking at, $400 a month is probably what the average consumer should not exceed. And then you're talking about 15 to 20% if you include fuel and insurance costs, but that's it. But if you're looking at sheer cost of that vehicle and lending and borrowing from the bank, don't exceed that $400 a month or 10%. You know, another interesting number I just came across, in 2022, the average household income that went towards cars was about $12,295 or about 14.8% of their income, which is the rule of thumb for all costs included for your transportation costs. But interestingly enough, things have changed, and the lowest income levels are the ones that seem to be paying the most amount of money for their vehicles. Those in the lowest tax bracket are often spending $4,928, which on average represented about 30.2% of their income. And that's their after-tax earnings. You compare that to 11.6% for the average, which was about $23,000, which were noted as the highest tax bracket. And with all of that said, be sure to check that video because the car market has totally flipped on its head and car buyers are excited. You definitely want to see that one. So I hope to see each and every one of you on the next one, and we'll catch you real soon. All right, bye-bye.